Him's House, Episode 9. I'm Jonathan Stern. I'm here with Lewis Stevens and Dr. H. Welcome back, Dr. H. We missed you on Episode 8. Happy that you're back with us today. Based on one of the suggestions from our budding Discord community, I want to discuss possible next drug opportunities for Hims, and then we'll launch into recent news. We've talked in the past about testosterone, menopause, fertility. How do you think through the question of what is the lowest hanging fruit for which drugs Hims could offer next? And specifically, could we discuss this from a doctor oversight complexity standpoint?
We can actually pull up that poster slide from the Discord channel where there was a Hims slide deck and they showed a roadmap basically of future avenues that they want to look into. In terms of lowest hanging fruit, I mean, there's several categories here, and I think they're all great ideas that Hims can get into. But the easiest one I can see on this list specifically would probably be menopause. It's something that they could jump in rather quickly, I think. A lot of menopausal care does not really require lab testing, blood testing. So as long as Hims can develop a great, comprehensive, detailed intake questionnaire where they can confirm the diagnosis of either menopause or perimenopause, which is the period of time right before menopause fully happens, there's a lot of great treatments that they can roll out and introduce that will help a lot of women going through this time and phase of their life. Many treatments can be prescribed based on just history and symptoms alone. You got a lot of things that they can even compound probably. So estrogen and hormonal treatments can be done in different ways. They can be done topically with creams and ointments. They can be done transdermally, so through the skin, possibly even done orally as a medicine you take over by mouth. But the lowest hanging fruit would be probably something like this, where you don't need to set up things like blood testing and monitoring, things like that. And it's a area where women can struggle to get care in clinic or in brick and mortar places. Many doctors may not be comfortable doing menopausal care, or if they refer you to a specialist, it may take a while to get into a specific menopausal OBGYN or doctor like that who really knows what they're doing with this type of hormonal replacement and hormonal treatment. So to me, that's one of the easiest things I think they can get into.
Is that to say, Dr. H, that you would need to do blood testing in order to spin up a testosterone offering?
To do it properly and by the books, I think you would need some kind of logistics where you do blood testing, number one, to see where a person's starting at in terms of their testosterone level, if they meet the criteria to treat. And then also you need to monitor what level the testosterone gets up to with your treatment. You don't want to get too high. Also, there can be some specific side effects with blood counts and things like that that you kind of have to monitor when you're replacing testosterone. And that has to be done on a semi-periodic time basis. So there is things to look at and track over time with testosterone treatment. So it's not quite as simple as some of the treatments for menopausal care.
What is the therapy for testosterone? I mean, I want to hammer on testosterone because it's come up maybe a half dozen times in the Discord. Hims has written several blog posts about it. And so it's clearly on the roadmap. Want to understand what exactly the experience would be like for patients. Is it a weekly injection? What's the therapy like?
Yeah, I'd imagine it would probably consist of, number one, finding out a baseline testosterone level for the patient, whether that is a patient coming into Hims already having had blood tests done before recently, so they could maybe show a copy of their lab test saying, hey, my testosterone level was 190 or 200 or something like that. And then the Hims doctor would confirm that and come up with a treatment plan. The most effective way to replace and treat low testosterone will probably be through an injection route. There's other ways you could do testosterone, like creams and gels, but they're just not as effective as the injection. So it's usually a once a week injection. And every couple of weeks, depending on where you're starting at, you would monitor and see what your testosterone level bumps up to. And then that's a discussion between the patient and doctor about what they're comfortable bringing the testosterone level up to, what numbers, based on numbers and also symptoms. So there can be follow-up where the patient would have to talk about how are they feeling on the treatment. Are they having better energy, or they're having better mental clarity, increased sex drive, things like that. So it's a once-a-week injection would be the most effective way to do it.
And then moving to fertility, I see that underlined, and diabetes. There was a question about that. How do those compare to testosterone and menopause?
I'm not sure what Hims is thinking about for fertility. I know some other telemed platforms have some sort of fertility offering. It usually involves coordinating with some in-person facility or in-person specialist. So, whether you're doing infertility testing, that requires things like sperm testing, it requires lab testing for the women, things like doing ultrasound tests and blood work and things like that. So it's a little bit more complicated, I think, depending on what route Hims wants to do with fertility, whether they want to be really comprehensive with it. If they want to be a comprehensive fertility place, they're going to have to set up some partnerships to do things in person, with imaging tests and blood tests as well. So I'm actually curious to see what Hims will do with this, because I don't know how they can easily do this online in a way that makes it just really streamlined and simple.
Dr. H, were you familiar with the Livongo business model?
They dealt with chronic care and specifically, I think, diabetes, correct?
Yes, diabetes.
Yeah, I didn't know specifically how they dealt with things like the logistics of it and monitoring and things like that. Was that something that you took a deep dive into?
Well, I think it was pretty straightforward. Livongo was a software platform, and it used glucose monitoring technology, third-party glucose monitoring technology from, for instance, Dexcom, and it plugged that into its software platform. I asked just because I didn't know if you were familiar, and if you were familiar, you could extrapolate that business model to what Hims would ultimately build.
Just to add a little context, this is the software company that Teladoc acquired for $18 billion and then wrote down
The entirety of the 18 billion.
the
One of the
in
most
its entirety.
catastrophic
right.
displays of shareholder capital destruction. One of the worst that I've ever seen. But I just didn't know Dr. H because I think looking at what Livongo did and extrapolating that to what Hims will do with diabetes could be interesting, because before Teladoc blew up Livongo, it was growing at incredible rates and the margins were strong and it was an attractive business model, but ultimately Teladoc hasn't handled it well. Did you have any thoughts in that regard?
Specifically for diabetes, I think if Hims really wants to go the tech route as this revolutionary way to, provide medical care and healthcare, specific with diabetes, I think it would be a natural segue into, as you mentioned, incorporating these continuous glucose monitors that are quite popular these days, even with people without diabetes, pre-diabetics, or anyone who's really interested in their health and well-being. Actually, you can get over-the-counter CGMs these days. But this would be a pretty interesting way where they can really tap into a lot of data and information. You would supply patients with the CGMs. You would collect a robust amount of data, use AI to help summarize and even interpret some of this data, and really kind of point people in the right direction of a specific treatment or lifestyle changes that can really help manage diabetes or prediabetes. So that would be something really interesting for me to see them do, is really go on the way of using technology. You could create contracts with lab places like LabCorp and Quest, and then you can do your A1C blood test every 3 months or 6 months. That's what a typical brick and mortar physician would do, but it'd be really kind of cool to see them using technology like CGMs and having the option to upload real-time data and have the physician analyze that information. Would be neat to see.
I definitely agree. I think something to note is just the difficulty of each of these categories. I think we're getting into more difficult categories to execute, which in one regard, that could mean lower margins, but in the other regard, it could mean good execution results and competitive advantages. And I think, even with the very basic offerings that Hims has thus far, we've discussed in the past that the execution has been a differentiating factor for the company. So I'm very excited to see what they do with these more complex, more difficult chronic issues.
Yeah, that's why I think the menopause area is a low hanging fruit. Is the medicines that's used are cheap to manufacture. They can be I think they could probably be compounded into some special formulation. So I would anticipate you can probably get some good margins from doing menopause care, because you're not dealing with logistical challenges, and then you can really then create your own special medications that are unique for HIMSS. So that's one thing that gets me excited about menopausal care.
Dr. H, when blood work is required in order to determine what to administer, how much, and so forth, what is that process? Who is HIMSS partnered with? Is it LabCorp or Quest? And can you walk us through what the experience is like for the patient?
For any lab work, number one, a physician or a provider actually needs to create an order and authorize the test. So someone would have to look over a customer's medical information and say, hey, actually, yes, this would be a good test to run for this patient because for whatever reasons. So we're going to check the testosterone level. We're going to check the blood sugar level. We're going to do those things. So they need to create an order that gets sent to the lab place. It can be done electronically. The lab will receive the order and then somehow coordinate with the patient to come in and do a blood draw to complete the specific test. HIMSS, I think I saw that they partnered already in the past with, I want to say, was it LabCorp? Do you remember seeing that?
I remember seeing LabCorp. I don't know whether they're partnered with Quest or not, but I'm pretty sure with LabCorp.
Yeah, I'm not sure what HIMSS is actively doing with LabCorp right now because I'm not even sure what they're checking for at this point. I know in the past they've wanted to do primary care and things like that, and it never really took off or had the momentum going to continue with it. So I'm not sure if they're actively doing anything with that partnership with LabCorp at this time.
An idea I was thinking about that I just wanted to interject, and it's somewhat tangential, is the idea that I found the cadence of HIMSS new product category launches to be interesting in the sense that I think they could have launched weight loss in probably 2022 or early 2023, but they waited until late 2023. And to me, it seems like they're doing this to smooth growth. They're being very methodical about when they're launching new products to ensure that there is linearity with the growth, that they're not just growing at 150% in one quarter and then experiencing, a collapse of growth, which would, obviously be very detrimental to the stock price and the valuation. So I think it's just a testament, we're all speculating about what the next product category is, but I think all of this is a testament to the idea that HIMSS is executing phenomenally. They're very methodical. They're very data driven. They're seeing around corners, and it'll be interesting to see if, the next category is menopause or testosterone or diabetes. These are more difficult, and I think there's going to require education to really accelerate them. That's going to be part of the product in the same way hair loss has been, to some degree, an education, a matter of educating the consumer. But it's been interesting to see them gradually launch these products. And it's exciting that we're going to see them launch new products in the future. And I just have faith that they're using data to decide on what timeline they launch these products to ensure that growth remains robust. They don't grow too fast. And
what was really interesting to me, Lewis, and I was wondering what you thought about this. With the weight loss rollout with their oral medications first, at that time, people were already really interested in GLPs, and that was the fad thing at that time. And then when HIMSS introduced it, it was these oral medicines, and it kind of took everyone a little bit by surprise because at that time of the introduction, everyone's like, yeah, we want GLPs and stuff like that. So why do you think they went with the orals first? My potential thought is they somehow had a good idea of what the market would want, that they would accept this treatment, and it's a treatment that still can provide some great results. And I don't know, maybe the management team was, I don't want to say cocky enough, but they're confident enough that this will be an effective treatment that people will like still, that they're just like, hey, you know what, we're going to show you that we can do things somewhat against the grain and not what's most popular, but we can still do it and succeed and be successful with it. And what are your thoughts on that?
Yeah, my 2 cents in this regard is that it's all data driven on their part. I think that, based on CEO Andrew Doom's psychology, the entire company, every iota of the company is a matter of data operations. So they're looking at what's our product roadmap, what's our current growth rate, what are our unit economics, how far do we think we can push each category, how much runway does each category have, When do the unit economics become impaired? So I think it's really a data-driven exercise for them where they're looking at the roadmap, they're looking at the TAMs, they're experimenting. They're probably experimenting in different geographies within the United States, identifying how much payback they can get on oral weight loss versus compounded GLP-1s. It comes back to my former point. I think they're just being very methodical with the rollout of new products. I believe that they could have already rolled out Menopause. They could have already rolled out testosterone. I know they could have already rolled out testosterone. I know for a fact they probably could have done it 2 years ago.
Why do you say that, Lewis? You say you know for a fact that they could have. Why do you say that?
Because I'm being advertised testosterone from other telemedicine digital healthcare platforms. Like Henry is offering me testosterone, which, by the way, I didn't get to share my thoughts there on it, but I think testosterone is really interesting because it is directly adjacent to hair loss, erectile dysfunction, and these other taboo medical conditions that importantly require education. I can't remember at any point in my life where somebody, well, I lift weights a lot. So I've met older men that are on testosterone, and that's why I personally am excited the offering, because I've seen what it can do. It can make 55-year-olds look like they're 35 to 40 with incredible strength. Granted, they keep lifting weights, but I think testosterone is an interesting one in the sense that it requires education. Nobody outside of the gym has ever told me, hey, you're going to have low T potentially in your late 30s just as a genetic issue, or you're going to have low T in your 40s or 50s as a matter of genetics. And there's a solution. Jeff Bezos has clearly imbibed the solution that is injectable testosterone. That's why, he's so jacked at 57 years old. So I think there's this whole generation of men that are about to be educated on.
Do we know this for a fact that Bezos is doing testosterone? Is that public info, Lewis?
There is zero chance.
I have no idea.
There is zero chance Mr. Bezos, executive chairman of Amazon, is that jacked at 57 without taking testosterone. It just won't happen. I've paid attention to a lot of natty or nots, natural and not, for those not in the weightlifting community. He's augmenting his natural testosterone at that age to achieve that physique.
I just searched Bezos testosterone. There are several articles on it, so you're not the only one speculating.
Elon Musk is on finasteride and minoxidil. Jeff Bezos is on test, and more power to him. This life is very short. So I think these are interesting. They're all a matter of educating the masses. There's side effects and there's risks. There's a side effect profile that is deeply considered for minoxidil, finasteride, for all the psychiatric drugs.
With regards to the testosterone, I've actually looked into some competitors for Hims on who could legit do a medical testosterone rather than for some guy who just wants to get jacked in the gym. Some of the more prominent ones online that have been advertising are Hone Health and Blokes, and they advertise that they do medical testosterone if you're low T. They do have working relationships with places like Quest and LabCorp, and I remember actually going through the intake to check it out. And one of the roadblocks or challenges was you're depending on this lab facility in your local area to really fit you in. And even with this online telemedicine service, trying to get an appointment for LabCorp, I remember seeing that it was 4 or 5 weeks out. And just at that point, I could picture someone's being like, you know what, I'll just try somewhere else. So it was made out to be convenient, but at the same time, you still had the same logistical challenges as going in to see a doctor in person. You still were at the mercy of their schedule and you're booking out weeks out in advance. So if Hims were to do this, I think they're going to have to tackle that problem of there's this expectation now that it's going to be easy and a person doesn't want to wait 5 weeks for a lab appointment. They'll need to try to figure out some way to accommodate that.
Well, while you were talking, Dr. H, it inspired thought for me. I think it's definitely a logistical question. And it comes back to what we discussed on a past podcast. Will there be Hims centers one day? Maybe they start really small with like one, around San Francisco or Chicago or Miami, a very densely populated area where it's kind of low-hanging fruit. That's one kind of thought that was inspired. And the other was the AI element, right? You go and get your blood work done, and then you feed the blood work into an AI that analyzes all of the data points and algorithmically decides, hey, this guy is just perfect for supplemental testosterone. And then a nurse practitioner or a physician looks at it and says, yeah, I agree. And they prescribe it. I think the testosterone thing is so straightforward. It's such a mathematical exercise with the blood work. The blood work's very comprehensive, and it's just a bunch of data. And ultimately, where's your testosterone? Is it like 100? If it's 100, then, you're probably a great candidate, but then we have to check the kidney function and the various other elements and then decide, is this person a good candidate? But I think it's a really straightforward matter of data. Would you say I'm wrong in that assessment, Dr. H? How easy do you think it would be for them to stand up this product?
I think if they can figure out all the logistics part of it and get it done so it's easy for someone to get their blood testing done without waiting several weeks, I think there's a big market for it. It's just Hims has this reputation now of just making things easier for people. So I don't see them introducing a product that has a lot of challenges to it. So I think they'll probably are being purposeful of when they're rolling this out so that they can do it in a way that fits with their MO of how they operate. There was a comment on the Discord a few days ago, and it touched upon what you were thinking about if they would ever introduce an in-person clinic, like a Hims model or Hims clinic. It's kind of interesting because now they have the 503B facility soon to be in operation. Legally now they can create and manufacture their compounded GLPs and compound medicines and sell it to healthcare facilities for either office administration or just being sold at healthcare facilities. So is it possible they could have a brick and mortar somewhere in a major city center? Possibly. I've also seen actually Hims do pop-up events in cities where they not necessarily had like consultations and stuff, but they just had a pop-up tent and they were showing off their over-the-counter products. Is there a world where they could do a pop-up clinic? That'd be kind of neat. Set up at a fair or something, have some providers in person just for a weekend and be able to point them in the right direction and either doing an evaluation or consult there or directing to do it online. That'd be kind of a neat idea. And then they have the treatment available right then and there. That'd be kind of cool. So there's so many things they can do now, especially with that 503B pharmacy. And it'll be kind of interesting to see what they do with that.
I really like the pop-up idea. They could have the Norwood chart come up. It's like, are you a Norwood 2, Norwood 6? Here's some finasteride. Fix you right up.
Lewis, what is the Norwood chart? I've never heard of that.
Have you really never heard of the Norwood chart?
No, I haven't heard of this.
See, this is what I'm talking about. There's just people. And if you've never heard of the Norwood chart, then we've got a long way to go with getting, supplemental test or.
Yeah, I'm one of the founders of Hims House. I've never heard of the Norwood chart.
Doctors love charts and scales and things. So if we can categorize something into a stage 1, 2, 3, 4, 5, it helps in diagnosing and categorizing the severity of a condition. The Norwood scale would be specifically for male pattern hair loss. If you Google it, it will show a cartoon picture of a guy in various stages of hair loss. And male pattern hair loss goes in stages in a certain order too. So by the end, if you're really late stage male pattern hair loss, you get the guy where the hair is just around the ears, basically in the back of their head. Where at the very beginning, it's like you start losing it at the front near the temples, just a little bit kind of starting to recede there. So you can see how it kind of progresses from stage 1 to stage 7 is the highest.
Yep.
So doctors will have scales for everything. So there's scales for how severe your ED is. There's scales for all different types of things, like how severe is your premature ejaculation? What's the score of that? So we'll basically score you on everything that you tell a doctor.
All right. I think this whole discussion about new product frontiers folds into our next topic. For people like us that are obsessed with the company, we keep track of the Hims jobs board. And Hims is now hiring compounding pharmacists for its 503B compounding facility. It's in Los Alamitos. This is the facility that was acquired in the Metasource RX acquisition in the last couple months. Any speculation what Hims will be producing at this facility? I can pull up the job listing if y'all would like to look through it.
Yeah, pull it up. But I'm imagining if they're hiring now for pharmacists and pharmacy techs and stuff like that for the facility, that means, I'm just thinking in terms of a timeline, they'll probably be expecting to roll out some treatment production from this facility in the next maybe 3 to 4 months. So it's happening, and it's going to be happening fairly soon. Do you think that's a pretty accurate timeline?
I don't have a comment on the timeline, but to create value for the listeners, the value of this compounding pharmacy is related to the overall Hims and Hers Health thesis, which is that it is a vertically integrated platform that competes with a portion of the TAM that urgent care and primary care physicians address. And this vertically integrated platform creates a differentiated user experience akin to what Uber has done in the taxi industry. And this differentiated user experience has differentiated economics. And we can see evidence of that idea in the financials of Hims, which are unlike any other financials for any other digital health platform in the public markets. There's no public health platform that resembles Hims, and that is attributable to this vertically integrated strategy they have executed. And the compounding pharmacy is one component of the value chain of this vertical integration.
I think we should get a pharmacist on the podcast one of these days. What do you think?
I think we might have a way to do that in the coming weeks. Are we teasing our episode 10 guest, Dr. H?
Oh, perhaps, but it'll be really interesting to see what they think about these expectations and roles.
There's a fellow on Twitter, Investor in Innovation, I think is the name he goes by, Twitter handle presidential01, just joined the Discord as well. He's going to be coming on for the next episode, and we'll give a pharmacist perspective. Just like you, Lewis, and just like you, Dr. H, has been clued into the Hims story for going on 4 or 5 years now. So it will be a really good perspective.
Yeah, I'm just seeing some of the tasks here. A lot of it is like batch operations and operating procedures, specifically things that are dealing with the 503B pharmacies, like the CGMP compliance. Those are all processes and things that are needed to make mass production of medicines. So it'd be cool to see what our pharmacist thinks about this.
One question that I have for him, if he's listening to this, and we'll certainly ask him, but what's the possibility of turning the compounding pharmacy into a revenue stream akin to what Amazon has done with AWS? I think the answer would probably be that they're just going to use it in-house, and the $500 million or $1 billion that it would generate long-term selling to external parties will just be generated through its platform. But it'll definitely be an interesting conversation.
Lewis, you're saying what are the odds that Hims turns this 503B into something that's making drugs for compounded drugs for all sorts of parties?
Yeah, like for instance, BPI Labs, which is the 503B compounding pharmacy that currently manufactures the compounded GLP-1s for Hims. Hims has a partnership with BPI Labs. I think they're doing like $100 million, $200 million in revenue. As the Hunter Brooks short thesis suggested, it hasn't been the best executed compounding pharmacy, allegedly. But what do they do with a 503B pharmacy that's executed very well? Can that become something like an AWS? I don't think it will, but I think it's worth considering the scale of revenue generation that this could produce as a standalone entity. And we could use that logic and math to inform its contribution to the vertical integration, the contribution to the value chain of the overall Hims platform. Something to think about.
Speaking of BPI, I gave them a phone call yesterday just to see how they were doing after Milton. And they said they were closed Wednesday, Thursday, Friday. So nothing produced, nothing sold those days. But they were open Monday. They're going to be open all week. And I think they're nearly back on track. So maybe 2 to 3 days lost. But the drugs that are priced are ready to go out. And they say they should be back on track.
I'm stuck on thinking about something that Lewis said earlier in this episode, and my brain's just been stuck on it for this time. You mentioned that Hims is very deliberate in what they do, and you said that everything's all data and they probably have everything all road mapped out and analyze it all. And I'm a big sports guy, so in my mind, I'm thinking Andrew Dudum is like, for telemedicine, he's like the Moneyball in baseball, or Daryl Morey's NBA analytical stuff, where they're really analyzing what's going to produce the best bang for your buck, the best outcome to lead to wins and things like that. Is that a fair analysis or comparison? Like Andrew Dudum's this Moneyball or NBA three ball analytical guru, and he just has this all figured out, and we're leading us down this pathway of what's going to be effective for healthcare, basically.
I mean, yes. So to answer your question, yes, through a certain lens. I don't want to get too far ahead of the thesis. I think it's important to acknowledge that the company is the best executed digital healthcare telemedicine platform in the history of American capitalism. I think that's just the objective reality. To answer your question, yes, Dr. H, I agree with that perspective, but also I just think it's always important to, temper expectations and just keep a mindset of, we'll see how he executes. We'll see how they do in the future. I think something that came to mind with your ideas is the idea that they are very methodical. They are data driven, like you said, but also there's really no rush. There's going to be a new batch of men that turn 45. That find themselves with low T. There's constantly a refresh of the TAM. And when HIMSS decides to show up, I think it is a contributing factor to the product rollouts. It's identifying the payback period on its CAC, and it's trying to grow in a methodical, disciplined way, as opposed to this reckless growth at all cost strategy. I think there's a lot of value in being balanced in how a company grows, and Apple has been a master of this in the sense they've always taken a little bit longer to release their flagship products, release the next products on their multi-product platform. They've always been very methodical, and they show up with a very great product. And the TAM's refreshing constantly. There's not this like sweaty race to capture this TAM. The TAM is constantly refreshing. And that's an important part of the thesis. And I do think with hair loss, though, I'll say with hair loss, because it is a for life, and testosterone's for life.
Yeah, I mean, you'll need it for as long as you want to have those benefits. Because once you stop it, it's not like your body knows how to make extra testosterone all of a sudden. You need that testosterone to maintain that level that you want.
So I guess I was joking in the sense that somebody takes testosterone and to achieve their physiological levels and become Mr. Olympia, but I guess it's just an accurate way to characterize taking testosterone when you eventually have low T in your late 40s or 50s, that you're going to have a super physiological amount because you're going to have a normal amount. You're going to have the amount of like a 30-year-old, but you're 47, 48 and jacked like the great Jeff Bezos. But I think, the Moneyball analogy is important to note. I think there's value in thinking about HIMSS as this extremely data-driven company. And we've mentioned it on past podcasts, and I know it's somewhat out of left field for the audience of this podcast, but I'm an equity analyst. I'm an expert on many, many companies. I've monitored them, and Monday.com has been a software company that has been extremely data-driven. They built a platform called Big Brain, which is what it sounds like. It's an intelligence platform internally that guides their capital allocation for operations. So how much capital are they going to allocate to labor? How much are they going to allocate to sales and marketing? And Monday, it's an interesting case study as it relates to HIMSS, because Monday has been a high sales and marketing platform. What I mean by high sales and marketing, it's spent as a percentage of its revenue a lot on sales and marketing. It's been very disciplined with R&D spend. It's been very disciplined with general and administrative, the labor portion of their platform. It's very similar to HIMSS and Hers Health, and both are multi-product platforms, but operating in different industries. And HIMSS has not been very vocal about its data-driven approach. It has been. It shares that it is data-driven. It's looking at the economics of its business. It's looking at what the next best category will be. But Monday has been very vocal about its Big Brain platform, which is an AI platform used to govern the operations of the business. And I think that, that's really Moneyball in like a very clear way. I don't think HIMS has been as transparent about being this Moneyball platform, but I totally agree. I think your analogy, Dr. H, is perfect.
Next topic today is Weight Watchers announced a GLP-1 offering last week. The stock doubled, Weight Watchers stock doubled. It looks like it will be $129 for the first month, $189 afterwards. But notably, you need to be a member, you need a consultation, and you need insurance. All of those things cost money. So, like all in, this is going to be way more than HIM's offering. Nevertheless, when Weight Watchers GLP-1 was announced, HIM's stock fell 5 or 10%. It's rallied since, of course, and I think we're at 2280 as we're recording this. How should HIM's investors think about another entrant in the GLP-1 space? Is it a nothing burger? How should we think about this?
The biggest thing I think about is the insurance requirement. Yeah, I mean, you're not really making it easier for people who have either no insurance or are underinsured, or the insurance just isn't great. So you're dealing with the same issues of trying to get this medicine covered, doing paperwork back and forth with the insurance company, see if it's what the price is going to be. It's just not making it easy for people to use. That's the biggest thing that jumped out at me.
For me, frankly, I just think that, who's the contender and who's the pretender? Who are the contenders? Who are the pretenders? And the reality for a lot of industries, for most industries that I cover, is that everyone, the vast majority of people are pretenders. And, this relates to Pareto's principle and the idea that it's like real estate agents. It's kind of the same idea, right? Pareto's principle applies to many systems in the world. But for instance, real estate agents, 1 to 5% produce the majority of the volume in a given region. There's a small subset who are actual contenders. And then there's people that are, averaging maybe 15, 25,000 in net commissions per year. And those are pretenders. And I think with all due respect to all the other platforms out there, it's worth asking who are the real contenders and who are the real pretenders, and who can execute these business models year in, year out, who can launch new products on the product roadmap, and who can do this with positive unit economics. HIMS is the best platform in the industry, mathematically speaking. And there is sweaty concern over its unit economics. All the bears are focused on the growing CAC per new subscriber metric, customer acquisition cost per new subscriber. And that has more or less doubled over the last 2 years. And that has called into question the viability of the business model. And so it's like, if the best one is experiencing growing cost per new subscriber, the absolute best one that is being formed into a diamond by way of the pressure of the public markets, with the former CFO of Netflix on the board, with the former COO and president of Novo Nordisk on the board, with the former CEO of Tinder, him CFO, Ime Okupe. He worked at Braintree and Uber at the highest level. These are the best companies in the world. Braintree, now owned by PayPal, and Uber, obviously everyone knows Uber. We're dealing with the best of the best of the best of the best. And so, thinking about the pretenders, if the number one contender is experiencing growing cost per new subs and the viability of its business model is being called into question, it's been my opinion, and I'll rhetorically communicate my opinion through a question. How can any of these other platforms compete when the viability of the business model for the number one is being called into question?
And on that note, let's turn to final topic of today. HIMS was recently added to the S&P Small Cap 600. Lewis, how did it get included, and what might this mean for the stock in the next 3 to 9 months?
So ultimately, frankly, it doesn't mean that much to me. I think it's very positive that it's being included, and the criteria for inclusion into the Small Cap 600 is a market cap between $1 billion and $6.7 billion. Public float, which is the public float of at least 10% of shares outstanding. So that's the number of shares available to be traded out of the total shares outstanding. And then earnings have to be positive for the most recent quarter and the sum of the 4 previous quarters, which is a reflection of the idea that HIMSS has profitable unit economics. Despite the aforementioned growth of CAC per new sub, it has expanded its free cash flow margin and relatively linearly over the last 8 quarters. It's generated free cash flow in 7 of the last 8 quarters. And it has generated net income. The sum of the last 4 quarters is positive from a net income basis. I think more publicity for HIMSS is important. I think just generally, the more success it has, the more it's featured on CNBC, the more it's discussed in the public consciousness of America. I think it's important. And I think Palantir, just as an analogy, has benefited immensely from just being discussed. It's captured mind share from simply being a topic of discussion, and it was included in the S&P 500, and that was a major milestone, and it led to greater publicity. Ultimately, though, all of this being said, I don't think it's that big of a deal. I think in the realm of value investing, we discussed it on last week's podcast, I'm a value investor at heart, which is simply the idea that we buy stocks based on quantitative realities. It can be very difficult to predict the future. And so what really matters is how much cash a business generates and how much of that cash will be available to us over time. And that could be said for HIMSS, same way it could be said for a local pizza shop. There's no difference at the end of the day in terms of what the business means. And what the business means is ultimately that it's a mechanism for producing cash flows. So with or without inclusion into the S&P 500, HIMSS will be valued based on the cash flows that it produces and how much of those cash flows will be available to shareholders over time. And on this podcast, we'll continue to discuss it through that lens. That being said, I'm not complaining. I'm not complaining about the S&P 500.
All right, I'm going to be the guy with a very, very basic question. With it being included in the S&P 600, does this mean that these investment places like Fidelity or Vanguard or iShares, does that mean they have to automatically always buy stock in HIMSS or a certain percentage or a certain number? What does that mean from that standpoint?
So yes, I am so hardcore anti-focusing on the indices that I hope I don't provide anything that's inaccurate here. But as I understand it, the managers of these indices, the managers of these ETFs that track the indices, will ultimately allocate a portion of the money that goes towards buying those index trackers, the companies within the index trackers. There will be greater demand. To answer your question, yes, there will be greater demand by way of State Street, Fidelity, Vanguard, allocating capital to HIMSS. So there is going to be greater demand. But, at the end of the day, it's the cash flows. Got to focus on what cash flows it will generate over time.
And Louis, one more follow-up question. You said for inclusion, you needed to be between 1 billion and 6.7 billion. We're getting dangerous. Well, we're not quite to the upper bound, but you never know what will happen during earnings and afterwards. We may be dangerously close to the upper bound soon. If we exceed, say, 6.7 billion, are we thrown out of the index, or is this just the criteria for being added?
Well, I think then it transitions to consideration for inclusion in, the S&P 500. Even when companies that I own get added to these indices, I'm like, all right, I'm happy, I'm excited, but at the end of the day, I think the right way to invest is to ignore the indices and to focus on the fundamentals of the business and buy a basket of businesses that are quantitatively attractive through the lens of the cash flows they produce and how fast those cash flows are growing and how durable those cash flows are as measured by the economic moats that protect them. And consider what your next best alternative is. If you can get a guaranteed 25% annualized for the next 10 years, you shouldn't be on something outside of the NASDAQ, the QQQ, or the S&P 500, or a risky growth stock. You should probably be buying that guaranteed 25% that you somehow are getting. So I look at everything through that very basic lens of how much cash is it giving me, how fast is the cash going to grow, how durable is the cash, and what can I get elsewhere. And I think it's fun to talk about this stuff, and obviously it creates market movements. But I mean, frankly, I'm just not so abreast of the specifics of, if it reaches 7.5 billion, I'm not precisely sure if that will lead to a S&P 500 inclusion over time, or a different S&P index, or what that actually means.
You just say you think this company would be worth 7 billion plus after this earnings?
I hope. I'll say on that, to that end, Roman Health was valued at 7 billion in the public markets in February of 2022 when stocks were collapsing. So I've just been, I've been laughing about that for years now, where, the second player is valued at 7 billion, and you wonder why Ro hasn't gone public. I think it's largely because, number one, it's being beaten by Hims and Hers Health. I think that's just the objective reality. And number two, if Hims is trading at 2.5 billion on average since February of 2022, then Ro's just basically walking into a down round for its IPO. That it would be a capital raise at a lower valuation, i.e. a down round. I think on a future podcast, we can definitely talk about the valuation and what the scenarios are for the post-earnings reaction. I think that would be we could do a live stream. I think it'd be great.
Well, this has been Hims House episode 9. Thank you everyone for sticking with us this long. If you're still here, a couple announcements, and I should have said this at the beginning of the show, but if you're still here, you get the good stuff now. If you haven't joined the Discord, you really ought to. It's the smartest conversation on the internet for Hims. And we just rolled out a data tracker for all members of the Discord. We're keeping track of website traffic, app downloads, app ratings, key financials, and more. Available only for those who are in the Discord. So if you haven't joined, please join. Also, click like. I haven't said that, but it's apparently useful on the YouTube algorithm. Like the video, subscribe to the channel, and we will see you next time. Thanks so much.